Hi everyone, welcome back to the US individual taxation classes enroll agent part 1. Yes, this particular class is of income and assets chapter, right? In this particular video, we'll be discussing basis of assets and holding period of assets. So let's dive into to understand more in detail. Hi everyone, welcome back to the US taxation class. Before we went on a break, we covered a couple of good topics relating to the assets, which include like real assets and personal property, right? So we discussed what is real property, what is personal property, how we can do the conversion from real to personal, personal to real. We did some example questions of that. Then after we did like category of gain and losses, which include like capital gain or losses or ordinary gain or losses. Then we discussed what are the capital assets and what are not capital assets, right? Then after we discuss an illustration for real property, cutting down into the plots, how we need to make the treatment. Then we did one more example. Then we discussed this big giant chart. Section 1231 assets, treatment of the gain and losses. And then we have discussed certain example in detail to cover all section 1231, 1245, 1250 and 291. So all the 4 sections which we have covered. Then we also did certain examples. Now it's time to jump into the assets basis and the holding period. So asset basis mean like what should be the value of asset we need to consider at the time of any transaction of capital asset we are making, right? So asset basically here, like Mayank, like you were saying, we should consider fixed assets. Either it may be land or building, which will go as a real asset, or maybe like plant, machinery, equipment, computers, automobile, machineries, all those things which will go into the personal property, right? So assume that fixed asset block which we have like in our school college background which we are used to see, right? So in that you have both kind of property, real property as well as personal property. But what will be the base of that respective asset we should be considering when we are making any transaction? So that should be like original base. Original base means like the purchase price which you have paid at the time when you have first time acquired that respective asset, right? In addition to that, if you have made any capital addition, that you need to add. For example, like you purchase a piece of land, let's say for $100,000. So initial base price for that land was $100,000, right? Then after you have paid amount of, let's say 5% of the registry cost, right? So that $5,000 additional you have paid for the registration of land on your name. So now the cost would be $100,000 plus $5,000. Right? After that, you have done some basic work for cleaning up that land to make it ready for use. And you have invested additional 5,000 to make that basic cleaning up of the land so that you can make it for the use. So that 5,000 is also like additional investment which you have made on the land. Now the land is ready to construct a building. Right now you have invested, let's assume $100,000 more to construct the building on that land. Now in your fixed assets block, you will see you have land and building, right? And the total value is $210,000. How it is come? Original $100,000 plus $5,000 for the registration plus $5,000 for the improvement plus $100,000 which you have invested to construct the land. So that is called capital addition you are making. Minus if you have any capital recoveries. So capital recovery, let's assume after 2 years. In the 2 year, you're using land and building and you are charging depreciation, let's assume 5%. Right? Over the period of 2 years, you have charged $4,200 as a depreciation. So that amount you'll be reducing to reach at the base after 2 years. Right? Make sense? Make sense, everyone?
Yes, sir.
Or shall I do some math or example for this? Or is it like comfortable, digestible? Yes, no, कुछ तो बोल रहे हैं.
Yes, sir.
मैथ कर दो सर, मैथ कर दो.
एग्जांपल
Sorry?
एग्जांपल के साथ बता दीजिए.
Okay. So let's do a small example here. So here, for example, land purchase. Great. Let's say you have purchased a piece of land on 112020. 112020 you have purchased for $100,000. Right? You have paid registration fee, let's say after 1 month. So 1st February you have paid $5,000 registration. Then you have done land improvement. Let's assume that has been done in the month of March, additional $5,000. Then after you constructed building, let's assume that took 12 months. Let's assume that took 12 months and you have invested, let's say, $90,000 on that, right? So what is the total base? Base on, let's assume, on 12/31/2020. What will be your base for 12/31? What will be your base for 21? And what will be the base for 22? So here in 21, how much is the assets you have? Let's assume 0%. Let's assume 5%, 5%, 5%. So on December 31st, 2021, right? What will be the value? Land will be same, $100,000. Yes, no?
Yes, sir.
Yes.
What will be the value for registration fees? You have 11-month depreciation.
250.
This multiplied by 5%, multiplied by 11, divided by 12, right? So this will be your depreciation for respective year, and this will be your base for the respective. So here depreciation will be 0. Here the base will be this minus the depreciation. Right. So here, as of now, it will be 0 because it's constructed in next year.
सर ये 229 कैसे आया सर, दोबारा बता दो.
So this is the formula. 5,000 is the value, 5% is the rate, multiply by 11 month, divide by 12 month. Make sense?
Multiply 11 month क्यों करा सर? Multiply by 11 month क्यों किया है?
क्योंकि उसकी डेट चेक करो.
वो दूसरे महीने में इसलिए.
It has been purchased in February. it's in March.
Okay.
Hmm?
ठीक है, sir.
So this is your depreciation for this year, right? So the next year depreciation for land, it will remain 0, right? For this, multiply by this. So for this, it will be this. And same is the case in third year. Right. So what is the base? So in the year 1. So in the year 1, what is the base? This minus depreciation. Make sense, everyone?
Yes.
Right. And now in year 2 will be this base minus depreciation of 2020 and the depreciation of 21. Right. And what is the base value in year 3? Amount minus depreciation of 20, depreciation of 21, and depreciation of 22. Right. So far, everyone comfortable?
Yes. फिर ये depreciation के method के ऊपर नहीं होता कि straight line method पे जाना है?
Yeah. As of now, just we are going with a very basic straight line method.
Okay.
So it depends on whatever the method given to your question. So just for illustration purpose, we are keeping it simple straight line method of depreciation as of now. Right? Everyone comfortable so far? Vivek?
Yes, sir.
Rajat?
Excuse me, sir. Registration fees के ऊपर भी depreciation लगेगा, sir?
Sorry?
तो registration fees के ऊपर लिया है 5%. ये ठीक है, sir?
Let's assume like registration is for 20 years. The life of
दोबारा कराना पड़ेगा registration. दोबारा तो नहीं होता, एक बार करा लिया.
Okay, so maybe like you can remove it.
नहीं ठीक है, sir. मतलब
Just like this is just for illustration purpose. Instead of registration, if I say land filling.
Okay, sir. Yes.
I know, become a lawyer sometime. It's in our blood. So let's say like land filling expenses $5,000 and land improvement expenses $5,000. Right? Will not go with the registration. Right, everyone? So far so good. Right? Now here, if I say at in January 2023, they are selling, let's assume 40% of land and building. So 40% of the land and building they are planning to sell on January 23 at how much amount? Let's assume $125,000. So here, how do you calculate the base? So base will be this much amount, 189,563. How you have calculated this base? Original value plus the additions minus the depreciation. Right? That's how we have calculated. Yes, no? Vikas, Mayank, sure. So how we have calculated the base? Original price paid plus all the addition capital expenditure made minus the depreciation or amortization, right, Or if there is, let's say, any loss of any asset, then reduce that also, right? So if you see here, the basis of asset is equal to original base plus capital addition, right? That is cost of improvement, taxes, interest, right? Any unproductive real property may be capitalized at the election of the taxpayer, minus capital recovery. Capital recovery, it may be depreciation, depletion, amortization, or any casualty loss. So that will give you adjusted basis. So what is the adjusted basis? 189,563 is called adjusted basis. Right? So here, so far so good, like how we have calculated adjusted basis.
Yes.
Now, the basis of property acquisition depend primarily on the method by which the property was acquired. So how do you calculate the original basis of the property? How do you calculate or identify these amounts, basically? How you have calculated and identified to these amounts. So as of now, we are discussing basis of assets, right? So basis start with the original stuff first, and then addition minus depreciation. So first thing is first, we are at how we come to this $100,000, $5,000, $5,000, and $90,000. So if you are purchasing something, right? Like any product you have purchased, any machinery you have purchased. So whatever the cost you have paid for it, so that is considered as the original basis first, right? Second scenario, if you are doing a group purchases. Group purchases mean, you know, what is acquisition or merger? Any idea of acquisition or merger? Yes, no?
Yes.
Yes, sir.
What is that?
Yes.
Sir, acquisition is buying of one company. Like, for example, if one company buys another company, that's an acquisition. Merger is that they divide certain percentage amongst themselves for some amount.
Merger between the Oriental Bank of Commerce and the Punjab National Bank.
Yeah.
Yeah. Any others? Yeah, you know, like partly right, partly not right. So acquisition is absolutely right. When one company acquiring another company, that is called acquisition, right? Merger is when two companies joining hands together and their entire assets and liability merge into one single consolidated financial statement. That is called merger. So in case of acquisition, when one company is acquiring another company, so there would be n number of assets, right, that is being acquired. So how do you allocate the price and value to those respective assets when you are making a group purchase? If let's assume, if I give you a simple layman example, let's assume you are purchasing this mold machine. Along with that, you are taking installation services, and along with that, you are taking the training service provided to your team, and in future, let's assume maintenance services. So let's say we'll come back to this example later. Let's say you are purchasing mold, you are taking accessory, you are taking installation services, and you are taking training services. From 𝐂𝐸 Limited, from 𝐂𝐸 company, right? So individually, they charge, let's say, $10,000 for a mold, $1,000 for accessories, $3,000 for installation, and $1,000 for training, right? So individually they charge how much? $15,000, right? And now you have negotiated. Let's say $12,000, right? So now you have negotiated, and negotiated price is how much? How much?
12,000.
The
negotiated price.
Negotiated price is how much?
$12,000.
$12,000. So now you purchase, your cost is $12,000, but you are getting the machineries, installation, and everything worth $15,000. So what amount you will capitalize?
12,000.
Accessories.
Huh?
$12,000.
$12,000 or $15,000?
12,000, sir.
Everyone agree?
Yes, sir.
Rajat, Mayank?
So the total we have to increase. So among the four, the mold, accessory, installation, training. So among of these, we are one single we have to increase, or the total we have to increase.
No, I didn't understand your question, man.
Like sir, it's written that 4 categories are there.
Mm-hmm.
So like we have to increase the total, or we have to show that what amount has increased.
No, I'm saying all these four things, their value is $15,000,
Yes.
and you have negotiated that at $12,000, and you are paying $12,000. So at what amount you'll be recognizing your assets?
Okay. 15,000.
15,000 or 12,000?
सर ये ट्रेनिंग सर्विसेज जो है ये मशीनों की ट्रेनिंग है.
Yes. How to use that machine basically.
Okay. So sir, my
Initial-
11,000 is the right answer.
Hanji?
11,000. Actually,
Why?
because training services तो उसको ऑपरेट करने की कॉस्ट है ना.
No. First time training, like how to use and operate that machinery.
Then फिर 12,000 मेरे हिसाब से. अच्छा, आप
Okay.
बताइए.
Shubham, Rajat,
Sir, 12,000.
right? Man, good. 12,000.
Yes. Sir.
But now this 12,000 you need to allocate among all these four assets. How will you allocate?
Pro rata basis.
So how you will be doing? Plus 10,000 divided by 15,000. Right? And now amount capitalized will be this multiplied by 12,000, which is your negotiated price. Right, everyone? Any doubt?
No, sir.
So far, so good. Right, that's how this 12,000 will be allocated among all the four assets.
ठीक है sir.
Right? So this is what they have mentioned. When you do group purchase, allocated cost to the individual asset at their fair market value. Their fair market value was 10,000, 1,000, 3,000, 1,000, right? And this 12,000 is allocated on this proportionate basis when you do a group purchases. Make sense?
Yes.
Rajat? Mayank?
Yes, sir.
Yes. Sir. Yes.
Third is bargain purchase. Bargain purchase cost plus bargain fair market value at the date of bargain purchase. So bargain gain mere when you negotiate it at a better price. When there is a one asset, the cost of that asset plus, or you can say bargain gain is generally you can say minus instead of plus, minus the bargain gain. What is bargain gain? which you have negotiated better, basically, right? So from the cost, you will be reducing that amount. D is inherited property. Inherited property, what is it?
Cost bargain. Sir, bargain, sir, दोबारा एक बार बता दीजिए, please.
Bargain is simple. If, for example, this $10,000 moved.
Okay.
This is $10,000 moved, and you have bargain at $8,000. Right? So your bargain gain is how much?
2,000.
Right? This 2,000 is your bargain gain. So value basis will be 10,000 minus 2,000. This is what it means.
Okay, sir.
Right. Next is inherited property. What is inherited property? You inherited from your parent, grandparent, in-laws, right? From someone, right? So that inherited property need to be considered, the basis need to be considered as fair market value on the date of death. Fair market value on the date of death, or alternatively, fair market value 6 months after the death if that fair market value is lower and result into lower estate tax liability. So you have option, you can consider the fair market value on the date of death or 6 months after the death if the price go down. If the fair market value go down and you have to pay less taxes. So this option is being available to you. So you can choose either the date of death fair market value or after 6 month date if the price go down, if the fair market value go down. Make sense? If alternative fair market value option is chosen and property is sold before 6 months, then the price at which property is being sold need to be considered as the fair market value. So here is an example. Let's assume on 1st January, right? Let's assume on 1st January, somebody on the client family has died. Let's assume the client's father has died. And on 1st January, the client has inherited the property. Let's assume $1,000 is the fair market value on that date. And on 31st March, let's assume he or she is selling either at $800, which is less than the fair market value, or at $1,200, which is more than the fair market value. Or third thing is the option available for 6 months after the death date, fair market value. So let's assume 4 scenario, $900, $1,100, $900, and $900. So first, let's focus on very first scenario. Just focus on this scenario, first scenario. On the date of death, the fair market value of the asset which is being inherited is $1,000, and your client has decided not to sell. Your client has decided not to sell, and after 6 months of the death, the fair market value is $900. So what should your client choose to pay less taxes? $900 or $1,000? Gift tax will be payable on the fair market value of the asset, either on the date of death or after the 6 months. So you will choose where the price are less, so that you need to pay less taxes. Make sense?
Yes. So $900 basically.
$900, right? Now let's jump into the second example, second scenario. Fair market value is same on the date of death, $1,000, and your client has chosen not to sell it, but fair market value after 6 months has increased to $1,100. So what will you choose? 1,000 or 1,100?
1,000.
1,000, which is less, so that you need to pay less taxes for state, right? Mayank, Rajat,
Yes.
Vivek, Garima. Third scenario is the fair market value on the date of death is again same $1,000, but now you have decided to sell and you are selling it on 31st March for $800. Whereas the fair market value on 6 months later is $900. So what should you consider for the payment of taxes? $800. That's what it means. If you are selling it before 6 months, then you need to consider sales price. Make sense? If alternative fair market value option is chosen and property is sold before 6 months, then sales price is considered as the fair market value. Last option. What is this last option? You have fair market value on the date of death, $1,000, and your sales is now $1,200. So what will you consider for the state tax liability? 1,000, 1,200, 900. So 900 option is no more there if you're selling it, right? So you have only two options: $1,000, that is fair value at the time of death, or the sales price.
$1,000.
$1,000. You'll look at the lower tax option. So that is $1,000.
Yes.
ये सर 900 का ऑप्शन क्यों नहीं है इसमें?
Because you have already sold. So how can you take that option? Before 6 months, you have already sold. So if you have already sold, you cannot avail that benefit. So in scenario 3 and 4, you cannot avail the benefit of 6 months after the death date, because you have already sold it. Make sense?
Yes, sir.
Right, everyone? Comfortable with this example? Any doubt? Mayank, Rajat, Vivek?
Yes, sir.
Okay. So next is gift property. If you have received any property as a gift, what will be the value or what will be the basis you will consider? Like for example, in this, let's say you got this land as a gift on 1st January 2020. So what amount you will be recognizing in the book as a basis? That is a question. So the basis will be the lower of donor basis plus gift tax, or the fair market value on the date of gift. So let's assume this land. Let's assume this land donor has purchased 10 years ago for, let's say, $20,000, right? And now you got the gift and you have paid gift tax, let's say $2,000. So how much is it? 22,000? Yes, no?
Yes.
Or fair market value on 1/1/2020. Let's assume that is $100,000. So which one you should consider out of these two?
22,000.
Huh?
22,000.
22,000, right, everyone? Donor basis of gift plus the gift tax which you have paid, or fair market value at the date of gift, whichever is lower. So if you are taking any property on a gift then you need to consider the basis as a donor value plus gift tax you have paid, or the fair market value on the date of gift, whichever is lower. If let's assume instead of land, it is a car. It is a car. And suppose your uncle has purchased the car for $20,000 and now they have given you as a gift and you have paid, let's assume, $1,000 as a gift tax. 22,000 is the basis, but the market value of that car is only $10,000. So which one you should consider? 21,000 or 10,000? What is the basis you will be considering? 21,000 or 10,000?
10,000.
10,000.
Absolutely right. Right. This is how we calculate the basis for gift property. Next is personal property converted to income production. Personal property you have converted to the business, right? For example, you have a car, that's your personal car, right? Now you have given that car to the business for office usage, office purpose, right? So in that case of scenario, what will be the value of that car in a business books need to be considered? Basis will be lower of adjusted basis of asset minus depreciation or the fair market value on the date of transfer, whichever is lower. So let's assume you have a car which you purchase.
Sir, सर लाइक अभी हमारे पास ऑप्शन आया था कि 6 months बाद फेयर मार्केट वैल्यू डिफरेंट थी, बट सर ये प्रॉपर्टी गिफ्ट और इसमें प्रॉपर्टीज में आ सकते हैं सर, लाइक
नो दैट वाज इन केस ऑफ डेथ,
ओनली इन डेथ, सो लाइक ओनली डेथ के केसेस में 6 months बाद हम कंसीडर कर सकते हैं.
इनहेरिटेड प्रॉपर्टी इज इन केस ऑफ डेथ.
Oh no, I mean like I thought gift property की fair market value 6 months अच्छे after 6 months it got changed, so and the price कम हो गया, so that's why I was asking.
That is applicable only for the inherited property, and inherited property came in case of death only.
Yes.
Right, just give me a second. Hello. No. Sorry. Got it, Mayank?
Yes, sir.
That 6 month scenario is only in case of inherited property. That is in case of death only. Right? Now you are converting personal property to the business property. Let's assume you have purchased a car, right, for $20,000, and you use that car for, let's say, 3 years. And you incurred depreciation of, let's say, $6,000. So book value in your book is 14,000. But if you sell that car today to the market, it will generate $10,000. So fair market value is $10,000. So you need to consider in the books of the business, lower of these two, book value or the fair market value on the date of transfer, whichever is lower. So $10,000 you'll be considering. Make sense?
Yes, sir.
Rajat, Shubham, Vivek, all good?
Yes, sir.
Are you guys with me?
Yes, sir.
Yes, sir.
Okay, so G point, property received as compensation of services. So for example, let's assume you are a good employee and you are working with the company for a very long time, and now company has given you a brand new Mercedes Benz S class, right? So so
केसी
what
में
will
भी
be the
मिलेगी क्या?
हाँ?
केसी में भी मिलेगी?
For sure. Why not? Why not? Definitely. So let's come over here. So property received as a compensation of service. So for example, an employee who has worked for 5 years and now company has given a car to him. So what will be the basis of that property? What will be the basis of that car that person should record in his book? The fair market value on the date when he or she received the car. Make sense? Yes, Mr. Mathur. Man, good.
Yes, sir.
H point is property transferred to a controlled in exchange for its stock. So now you are transferring property to purchase the shares. Stock in US we call shares. Like to shares in US we call stock, right? So you are transferring the property to purchase the stock to manage the controlling interest. What is controlling interest? We are getting more than 50% of voting right, right? So basis of stock received. What will be the basis of stock received? Book value of the property you have exchanged, like book value of the property you have given to them, plus the gain on the property you have exchanged, minus if you have received any cash, or minus other property if you have received from them. So that will be the basis of the stock which you are receiving as investor. What will be the price or what will be the base that company will record? Book value of the transferor, like your book value, plus gain recognized by the transferor, right? So that will be the value of the property to be recognized in the books of accounts. Let's do an example for this. For example, let's assume Mr. Sachin. Mr. Sachin has a piece of land purchased. Let's say 10 years ago, or let's say $50,000. And now the fair market value of that is, let's say, $100,000. And this property they have given in exchange of share A, B, C, and Co. Let's say 1,000 shares of $100 each. So in this case of scenario, what will be the value in the books of Sachin for the stock which he is purchasing, and what will be the value of the land in the book of ABC Limited? What will be the value of land in the books of ABC?
$100,000.
$100,000. Everyone agree?
Yes, sir.
Okay, so now let's make some twist over here. So in addition to that, Sachin has received cash, $20,000. In addition to that, Sachin has received cash and also received a car of $15,000. So now, what is the basis of shares in the books of Sachin? Fair market value minus the cash received minus the car received, $65,000. Yes? Yes? No? Are you guys with me?
Yes, sir. Yes, sir.
Yes.
So what is the basis of share in the books of Sachin? $65,000. Look at this one.
Yes.
Basis of stock received, book value of the property exchange plus gain on the property. minus cash received minus any other property received. Now, the basis of property acquired in the books of company ABC Limited. Book value of the transfer plus gain recognized. That is $100,000. Make sense?
Yeah.
Last one is taxable exchange. Always be the fair market value. The basis will always be fair market value. So we will be covering calculation of basis for the following in detail: tax-free exchanges, involuntarily conversion, sale of personal resident, and wash sale. We'll be discussing those in detail. So next quick topic, or the you can say last topic of the day, is holding period of asset. Holding period of asset. If you are holding any asset for more than 12 months, it is called long-term assets and resulting into long-term capital gain or loss. If you are holding the asset for less than 12 months, it is called short-term asset and resulting into short-term capital gain or losses. Simple. Everyone comfortable? Less than 12 months,
Yes, sir.
short-term.
Yes, sir.
More than 12 months.
सर ये रेट ऑफ टैक्स दोनों का अलग है क्या, शॉर्ट टर्म एंड लॉन्ग टर्म का?
Say that again.
रेट ऑफ टैक्स दोनों का अलग अलग है,
Yes, yes,
शॉर्ट टर्म
yes,
और short term.
yes.
कितना कितना है ना?
We'll come to that. There are slabs.
ओके सर.
Right. So note over here is inherited property disposal within 1 year shall be considered to have been held for more than 1 year. So if you have inherited any property, if any of your client have inherited any property, when any property is called inherited?
In case of death.
In case of death from the, right? So if your client has inherited any property, it is considered as long-term property. Second, if any security means stocks, means shares, which is a capital asset, become worthless during the taxable year. That means if you have purchased the shares of any company and that company has gone bankrupt and all the share value is now gone down to zero, then book the losses on the last day of the taxable year. If it is for less than 12 months, then short-term losses. If the holding period is more than 12 months, then long-term losses. But you need to book on the last day of the year. Make sense? Any
Yes.
doubt here?
No,
So
sir.
for example, if you have made an investment in XYZ Limited on 1st January 2001 by purchasing 1,000 shares of $100 each. That means you have made an investment of $100,000 on 1st January 2001. XYZ company got bankrupt at year 4, that is 2005. And the value of share are worthless. So here, how much is the holding period? 4 years? Yes or no?
Yes, sir.
So 4 years is more than 1 year. So it's a long term. So you need to book a long-term capital loss of $100,000 because value is zero now. Which date you will be booking the loss? On 31st December 2005. Make sense?
Yes, clear, sir, clear.
Okay, so now let's do some practice question. C purchased F stock in 2015 and sold it in 2021. So is it short term or long term?
सर ये ब्लैक हटा दो सर, ये पहले ध्यान वहीं चलाया था.
So let's go line by line. First one, C purchased F stock in 2015 and sold in 2021. Is it short term or long term?
Long term.
Long term. So in 2021, he also traded in a copy machine that he had been using in his business since 2017 for new model. On December 15, 2021, he inherited 35 shares of F laboratory stock. What is the holding period of these properties? All short term, all long terms, F stock long term, copy machine, and F stock short term, Flora stock, Funa stock long term, and copy machine short term. So let's do one by one. First one is Flora stock, which we have discussed long term, right? Second one is copy machine, which he has purchased in 2017. So that is also more than 3 years. Yes.
Yes.
So that is also long term. Third one is he inherited 35 share of Funa Laboratories. So he has inherited. So inherited property is always long term or short term?
Long.
So all the three properties are long term.
Yes.
Hence the answer is fourth option. Make sense?
Yes, sir.
Yes.
Okay, next question. D began operating a hardware store in current year after constructing a building at a total cost of $100,000 on a land previously acquired for $50,000. So he was already having a land, $50,000, and on that he has built a building of $100,000. In current year, the land had a fair market value of $60,000. D paid real estate tax of $5,000 in current year. What is the total depreciable basis of Dove business property? What is the total depreciable basis?
So basically, we have to tell that which one is the depreciating asset or depreciating amount.
Yes. On
So
how much amount depreciation need to be charged?
sir, building is the only one I can see. Like the 1 lakh.
Why not
Real
land or why not real estate tax?
Sir, real estate tax like and these are also depreciating. But you just told in that example registration fee, so I'll consider that real estate taxes are also not depreciating.
How about
So-
others? Rajat, Vivek,
सर
Garima?
1 लाख आएगा सर इसमें 1 लाख
Why?
सर बिकॉज कॉस्ट उसकी 1 लाख है
किसकी?
बिल्डिंग
उसने
बिल्डिंग
जो परचेज करी थी कंस्ट्रक्शन की उसकी 1 लाख कॉस्ट है और उसमें टैक्स तो सर सामने गवर्नमेंट को चला गया तो वो उसका वो नहीं है ना, तो अपन टैक्स के ऊपर डेप्रिसिएशन नहीं कैलकुलेट कर सकते हैं.
No, tax is an expense or asset?
Expenses. Not
Yeah,
asset.
because, yes. Right, everyone agree to it? So taxes are expense and lands are not depreciable. So only the depreciable asset is building, which costs to $100,000. Hence the depreciation base is $100,000. Make sense?
Yes, sir.
Okay, so this is it for today class.